Good morning, students. So today we will do two more sections. So section 55A is about reference to the valuation officer, which as per this section gives the power to the assessing officer to revalue the capital assets and bring it to fair valuation. It means that when the assessee calculates the capital gains, they show the assessing officer the sale consideration, right? And this should be as per to the fair market valuation. ठीक है, जो प्रॉपर्टी होती है उसका जो फेयर मार्केट वैल्यू होता है उसी के बेसिस पे यू डिसाइड द सेल प्राइस. But when the assessing officer can is of the opinion that whatever the sale value so claimed by the assessee is less than its fair market value. So if he sees any inconsistency, even if as regard to the nature of the asset and other relevant circumstances, it is very much necessary to revalue the capital asset. In that case, the assessing officer has the power to make a reference to valuation officer, and valuation officer will recalculate the value of the capital asset. तो usually क्या होता है, जब when you calculate the capital gains, you provide the sale consideration, subtract your cost of acquisition. So sale consideration, if you are showing as to be less value as compared to the fair market value, then as a result your capital gains will be lower, right? So this is one way of avoiding the payment of taxes to the income tax authorities. But when the assessing officer is of the opinion that yes, this value is not as par with the fair market value and this has to be recalculated again, in that case the assessing officer has the power to make a reference regarding this calculation to the valuation officer. Okay, so before moving to valuation officer, first we'll discuss the definition of registered valuer. So registered valuers are also referred to as private valuers, and they are authorized by the board of income tax board, and are recognized by the income tax department. They work in a private capacity and their valuation is not binding on the tax authorities. Means they have a legal standing, but whatever value they suggest, it is not binding on the income tax authorities. But as per the Income Tax Act, the assessing officer should not ignore that value unless he has approached the departmental valuation officer for valuation. So whatever value the registered valuers are given, in case the assessing officer is of the opinion that it is less than the fair market value, in that case he can ignore that value and make a reference to the valuation officer. But in any case, he should not ignore the value which is given by the registered valuers, okay, because they have a legal standing. It's just that it is not binding to the income tax authorities. So in case they are of the opinion that it is at fair market, then they consider the registered valuer's value, otherwise they will make a reference to the valuation officer. ये registered valuers usually जो आपकी normal assessees होते हैं, like us, we don't have the capacity to value our property, right? So usually the normal assessee makes a reference to the registered valuer in order to calculate the value of their property, in order to make the sales price. That for this reason only they make a reference to the registered valuers. Okay, so next is the definition of valuation officers. So valuation officer are also known as departmental valuation officer, and they are recognized by the income tax authority and they are authorized and approved by them. So when the tax authorities require the revaluation of a capital asset, then the tax authorities may request a valuation officer to ascertain the same, and this valuation will be binding on the income tax authorities. Okay, so valuation officers are the employees of the income tax authority. So whatever value of the asset they calculate, now it is binding on the income tax authorities to consider as the sale price. So the sale consideration for the purpose of calculating capital gains will be taken as higher of sale price disclosed by the assessee and the value calculated by the valuing officer. Okay, so whatever the two values the assessing officer has, he always have to take the higher of those values. Okay, so please remember that whenever the term valuation officer value is there in the question, then you have to take the higher of that value, whatever the sale consideration the assessee is showing and whatever the valuation officer is calculating. So whenever this word is there in the question, you always have to take the higher of these two values. Okay. Now the next important section is section 50C, which is about stamp duty value and full value consideration. Okay, so section 50C is applicable only to land or building or both. It could be long-term capital asset or it could be short-term capital asset. It could be for depreciable asset. It could be for non-depreciable asset. But whenever stamp duty is there, it is always applicable to land or building or both. Section 50C uses value adopted by the Stamp Valuation Authority for the purpose of levying stamp duty on registration of properties as guidance value to determine the undervaluation of land or building, if any, in the sale agreement. So whenever the registration of properties happen, the assessee has to give the stamp duty, which is a fee which is being payable to the state governments. So usually the Stamp Valuation Authority, for the purpose of calculating the stamp duty, they calculate a value for that property, which is just a guidance value to determine whether the valuation of land or building there in the sales agreement, if it is undervalued or not. Okay? So this is the stamp value. So in case sale consideration received or claimed to be received by seller on sale of land or building or both, in case it is less than the value adopted by Stamp Valuation Authority, such value adopted by Stamp Valuation Authority would become actual sale consideration received or accruing to the seller. Therefore, the capital gain would be valuation as per Stamp Duty Authority, which is now reduced by cost or indexed cost of acquisition, whatever the case. So whenever the stamp duty value is there in the question, then you have to ascertain whether it is less than the sales consideration or not. Or if it is less than, then the assessee has to take higher of the stamp valuation, stamp value, because it is a guidance that this is the fair market value, because this is calculated in order to levy the stamp duty. So you always have to check whenever the stamp duty is there in question, that whether it is higher than sales consideration or lower. If it is higher, it means you have to take that stamp duty value. There is another rule attached to it that we'll discuss in the coming slide. So if the stamp duty value on the date of agreement or on the date of registration is different, okay, so at the time of agreement, definitely, because the stamp valuation keeps on changing. So for example, if there is any change of stamp duty value, duty value on the date of agreement or on the date of registration, if it is different, then you always have to take the stamp duty value on the date of agreement as to be the sales. Okay, so agreement वाली लेनी है, ना कि registration वाली, given the condition that where the amount of consideration or part thereof has been received before the date of agreement. So in case कुछ भी consideration अगर receive हुआ है date of agreement से पहले, जैसे usually हमने करा था ना advance money कुछ होता है, so advance money अगर कुछ भी receive हुई तो इसका मतलब हम date of agreement की value, जो भी stamp duty value है वही हम consider करेंगे. We not consider the valuation as on the date of registration. कंडीशन क्या है कि कुछ अमाउंट तो हमें रिसीव होना चाहिए बिफोर द डेट ऑफ एग्रीमेंट. नाउ द important part here is to note that budget 2018 has brought about an amendment in section 50C. ठीक है, budget 2018 से पहले क्या था, whatever the value is higher, we'll just take that of it. Okay, stamp duty value या फिर sale consideration which is disclosed by the assessee. But after budget 2018, what has been made? It has been made in order to calculate first what is the variation between the stamp duty value and the sale consideration. If the variation is more than 5%, okay, if the stamp duty value is more than 5% of the sale consideration, then only we have to take the stamp duty value as a sale consideration. Otherwise, we'll ignore that value. So every time you have to compare what is the sale consideration, what is the stamp duty. Then next step, whether the stamp duty is higher than sales consideration or not. If it is higher, then you have to calculate by how much percentage it is higher. If it is greater than 5%, then you have to take the stamp duty value as your sale consideration value, and if it is not higher than 5%, then you will just take the sale consideration which is disclosed by the assessee for calculating the capital gains. So these two sections are very much important from the examination point of view, because sometimes in the questions valuation officer value or the stamp duty value is given. Okay, so whenever there is a case, you always have to make a judgment that which value you have to take higher of. So in order to take the value, stamp duty value and your this whatever the sale consideration, in that case you always have to check the percentage increase. Okay, if it is more than 5%, you will take that. And in case of valuation officer value, whatever value they decide or whatever the value they assessing is showing as a sale consideration, you have to take higher of that. हायर आप ले सकते हो क्योंकि हो सकता है आपकी वर्थ 5 लाख हो पर आपने 10 लाख में बेच दी हो. ठीक है, सो आप हायर डेफिनेटली ले सकते हो, बट यू आर नॉट अलाउड टू टेक द लोअर वन, क्योंकि आप 5 लाख की प्रॉपर्टी डेफिनेटली 4 लाख में नहीं बेचोगे, कम में नहीं बेचोगे, बिकॉज यू नो इट मीन्स यू आर ट्राइंग टू अवॉइड द पेमेंट ऑफ टैक्सेस. आप कुछ ब्लैक मनी ले रहे हो, आप व्हाइट मनी नहीं ले रहे हो. तो दिस इज द मेन रीजन of the government for introducing these valuation, so that the fair calculation of the capital gains can take place. So in case of any doubts, please feel free to reach out to me anytime. Thank you for watching.